There's three of us doing this presentation tonight. I'm going to do the introduction and kind of talk about the history of the lender questionnaire. Mark Einhorn will be doing information about the questionnaire and what's happening right now. And Janet Aronson will be doing practical advice based on what's happening with the questionnaire, things you can think about and do. Everyone's going to be muted just so it works better. You can chat if you want, but if you want to ask a question, type it into on the bottom of the bar, wherever it is, you type in the Q&A section. That way we don't lose all the questions in the chat. So if there's any questions, we're going to do that at the end. This is supposed to be about an hour long. We'll probably go about half an hour, maybe longer. And then we can do questions as long as you want, except I'm sure people want to go watch the Celtics game. So, but as long as you want, I'm sure we'll be happy to be here. Right? Anybody? We don't need to leave anywhere. We're not big Celtics fans. I know I'm not supposed to say the number, but we have, let's turn this on. We have over 450 people here tonight, I think, because this is a very hot topic. Clients ask about it a lot. Managers ask about it a lot. Mark and I have done 2 seminars for managers specifically already and had almost 200 people at those seminars. So how did we get here where we are today? So this questionnaire, this lender questionnaire you're hearing about, it's been around since I've been around for 30 years. So it's been around for a while in different formats and different questions were asked. So it's nothing really new. There's been a push and a pull between the lenders and the condo associations as to what questions are on here, what we're willing to answer. Back in the day, we could actually say, we're not going to answer any of your questions. We're going to put our own answers out. And we used to give out a form like that. But nowadays, we're back to the lender questionnaires and we're trying to answer them. Back in the 90s, there was a lawsuit over this. A property manager filled out a questionnaire, an owner bought, found out there was going to be a special assessment, was unhappy and sued the board and the management company and won some considerable amount of money, and it went on for a while. So it's a serious thing. And once that lawsuit occurred, everyone took these forms much more seriously and they're much more careful in filling them out. So that was a few decades ago, but it's been going on since then. Just so you all know, you are not required to fill out this form. And I know Mark will cover that, but there's no requirement to fill out this form at all. The lenders ask and associations do it because they want the closing to happen. The lenders want some basic information like the budget, stuff like that. So they have these questionnaires and we answer as many questions as we can. But if you don't do it, there won't be, the closings won't happen. So it's kind of, again, a push and a pull as to what people will fill out. So then we're going to come to the more recent history, the Surfside Collapse in Florida, the condominium building that collapsed. That apparently, now besides all the tragic loss of life and all that, that made the lenders very nervous as to what questions they were asking. So out of that collapse, the banks got together and came up with a bunch of new questions that they were going to ask everybody to answer. I think it's actually an addendum to the questionnaire. So if you answer these questions and you answer them improperly, we think there's liability exposure. So you need to obviously be honest and you need to answer questions that are asked that you know the answers to. But if you don't know the answers, then you really can't answer the questions. What is really happening is the banks are shifting the burden of finding out information. They figure it's easy to ask the associations. So some associations just answer all the questions without thinking about it. But what this seminar we're going to talk about is why you have to be concerned with the questionnaire, answer the questions that you know. And as condos are getting to be older and older, I mean, condominiums are 20 years old, at least most of them, not all of them, but a lot of them. And the older they get, there's more structural issues and the lenders think that they need to ask these questions. Now, to me, it's an overreaction and the pendulum has swung too far, but that's where we are right now. So we're pushing back and they're pushing back at us. And we're trying to figure out a happy medium. No one really knows where this will end up, but right now we know what we're telling our clients to do. And the reason we wanted a lot of board members on tonight is you're going to be getting pressure from your unit owners and from brokers and from bankers to, hey, you better fill out this form. You're required to fill it out. We're going to sue you if you don't fill it out. But none of that's really true. You don't have to fill it out, but you want to accommodate so that closings can happen. And with that, I'm going to turn it over to Mark Einhorn.
Thank you, Richard. It's a good intro. Jenny, you want to go to the?
I am actually I can't advance the slide for some reason. I don't know why. You press the button and it doesn't move.
You do this every time to me.
I know. I don't know why it's not. Oops.
Oh, okay. Well,
but okay.
That's good. So the focus of the new requirements for lenders is on the structural integrity and deferred maintenance, basically after Surfside. These are some of the requirements that make an association not eligible for funding. Buildings that have a full or partial evacuation for more than 7 days, projects that have been damaged or have deferred maintenance that's creating a danger or some other condition. Buildings that have failed inspection or have open violations aren't eligible. And then any problems with major components like HVAC, the roof, building envelope, those are all problematic and could make a project not eligible. The routine maintenance and damage limited to a few units, even if it's in the same building, doesn't make a project not eligible. So if there's a water leak that occurs and it affects multiple units in a stack, that technically should not alone make the building not eligible for funding. Like Richard said, unfortunately, there was definitely an overreaction after Surfside, and the new requirements not just cover high rises, but they cover any building with 5 or more attached units. So they're treating, unfortunately, clustered townhouses the same way they treat a high rise on the coast, which again is probably an overreaction. And although both agencies are saying that the guidelines are temporary, they're probably going to be permanent. At least that's what we expect. You want to go to the next one, Janet?
I will if my computer button would work, which it doesn't seem. It's not that difficult. I don't know why it's not going forward.
I'll ask Tina to go in there.
Okay, I can click it on my mouse. I got it.
Technical support. So as board members, you can expect a lot more attention being paid to the actual condition of the property and the actual cash that are in the accounts of the condominiums. Janet will probably talk, well, she's going to talk a little bit more in a few minutes, but there's a shift happening and there's a growing expectation that associations will be adequately funded and that the buildings will be properly maintained, and lenders now want and expect documentation evidence to show that. So lenders are being told to look for certain issues. Special assessments are a red flag because they indicate that a property is not fully funded or not properly funded or underfunded. Lenders are also looking at the amount of the assessments and how that affects the marketability of the project. More financial records and documents are being requested. In the old days, just providing a copy of the budget was sufficient. That's not going to fly or not going to cut it. There's more, and in the budget, they want to see that the reserves are adequate. So at a minimum, 10% of the budget for the year should be going into the reserve account. So if your association is not doing that, we should correct that now, because that's going to be a red flag and probably will hurt funding. So the bottom line.
Mark, I interrupt for 1 second. People are typing questions in the chat. Can you type any questions just in the Q&A section, because they're getting buried in the chat? Thanks.
No, it's a good point. Yeah, there's 44, looks like, in the chat. It's going to be hard to find. Really, the bottom line is that lenders are asking for much more information, and associations don't have the information and they have to adjust to it. So around the country, associations are really struggling. Want to go to the next one? In addition to the guideline requirements, as Richard mentioned, there's a Fannie Mae and Freddie have adopted a joint condo questionnaire addendum. And the problem is that many of the questions are difficult to answer because they're so broad and they require expertise that the boards and managers don't have. On the screen are a few examples. Is the HOA aware of any deficiencies related to safety, soundness, habitability, or structural integrity. So, given how broad that question is, I'm not sure any of our associations could safely answer no. I mean, there's always something that needs to be repaired, and who is going to make the determination whether it affects safety, soundness, or structural integrity? That's a question for an engineer. That's not a question for you as a board member or a property manager, or even us as attorneys. Some of the questions also ask about what may occur in the future. Are there outstanding violations, and will there be any violations in the future? Difficult for an association to answer that. Difficult to know what, if any, violations there are going to be. And of course, as Richard mentioned in the intro, the answers to these questions matter, because if something goes wrong, the association could have liability, and they're going to come back to the association. At the same time, if associations don't answer, or don't answer the way the lenders want them to answer, then owners can't refinance and sell their units. And that's really where the pressure to answer, and to answer the way the lender wants the answer, is really ramped up. We've seen a lot. We've seen lenders threatening to deny funding. We've seen owners complaining that their sale or refinance is being held up. Owners have told boards that the property manager is not doing the job, and threatened to sue. So there's a lot of pressure being applied all around. And this usually happens, these requests usually come in, a few days, a week before closing. And then it becomes, we need the information, and you're causing the problem. You're being the obstacle. Want to go to the next one, Janet?
Mm-hmm. I can.
All right. So we are advising all of you, our clients, to be cautious, but to still try and answer what they can. So what you can. So there's no legal requirement, as Richard said, to answer these questions. I saw one question pop up. Does that apply to all states? It does. These are, if you're an association, you don't have to answer a third-party questionnaire. Obviously, if you don't, there's going to be consequences. So we say we want you to, and we encourage to try, because you want the property to be marketable, but there's no legal requirement. When responding, you really should be careful. Don't guess. Only answer what you actually know, and don't answer questions that require a professional expertise. Like if there's questions about structural conditions or possible deferred maintenance, those are questions that, you can see in number 3. Our response would be the question is overly broad and beyond the scope of what the board and manager can answer. Lender can perform its own investigation. As you can imagine, that usually, that causes some pushback. It's not always acceptable, but sometimes it is. So if the lender does push back, there's the next slide on this one. You can redirect or direct the response to what you want to answer, what you think you can. So in this example, the response is basically saying, instead of having an open-ended, saying that, no, we haven't received a written report from an engineer or any written notice of violation from an official within the last 12 months. So it's changed the question, and don't be afraid to do that. Most of the time, lenders will say, we have to answer yes or no. That's not true. You can answer this way, or you can explain, especially if you think that a yes or no answer is not suitable, you can explain that. Also to note is that part of the guidance to lenders is, if the association doesn't have the information or can't give the information or doesn't want to, they direct that the lender should be empowered to look elsewhere. So they can go ask the building inspector for the city or town. They can look at minutes. They can have the building inspected. So there are other avenues, even though it's usually, when it gets to the board or the manager, it's usually presented as, you're the only source of information, but that's actually not true. And it's something to keep in mind.
And Mark, I was going to add, these 2 examples you're showing, we use these. So we're using these for clients. So we know this is being used. We know companies out there that do this all across the country have standard answers. They use answers that are somewhat similar. where they're trying to just say what they know. And we know the closings are still going through because we're not hearing, oh, all these closings are falling apart. We've seen a few where there's been a few issues. Usually it's with the first person in the process not submitting it to the lender. But we know that so far this seems to be working where they're getting an answer, or even better, if there's an actual report, they're happy because they see something. We think they want to just check out the box and know that they have it. We don't really know how they're going to react over the next few years, but we think that as long as they have something, they're okay. So these are real life examples of what we're putting, because we have a number of clients that ask us to fill out the questionnaire for them. They make the owner pay for it, and then they have us review it, and we put these answers in here, and these answers are working. So this isn't just
Yeah, I will agree on that. And also to add that even for the lenders, these guidelines are new, so they're not really sure exactly what to look for either. So I think that's in some ways bought associations some time. So we'll see. But I did a seminar recently for the Mortgage Brokers Association, and they had Fannie and Freddie representatives there, and they were pushing hard that these guidelines have to be followed. So we'll see what happens.
Well, didn't they also say there was, I think you told me it was called a naughty list of.
They do. Oh, well, they didn't call it the naughty list.
You do?
I called it the naughty list. But yes, they're supposedly compiling a list of projects that are not eligible for funding. We can't access that list, but internally they can. I don't know any associations that we represent that have been on it, or I haven't heard any denial of loans, but supposedly that is the way that they're going to keep track of this, which
Didn't they discuss with you, Mark, that if there's an ongoing project that they won't consider that as acceptable until the project is complete?
Well, yes, that's also problematic too, is that, okay, say there's a envelope problem and it's, funded for it and the project starts, they're actually saying they may not fund or be eligible until the project's complete. Again, I haven't seen that happen, but that's at least that came up during our seminar, our discussion.
Which would be a shame. So you have a proactive condominium that finds the problem, addresses the problem, gets a loan for the problem, starts doing work on the problem, and it's a 3-year project because it's major. If they then say that nobody in that project can borrow money, it seems kind of crazy from our point of view, but from their point of view, they might say, well, there we go. There's a building that's got a problem and it's not fixed yet. But I guess we don't know. We've done a number of these seminars, and it's kind of been a moving target. Each time we talk about it, different things happen, and we find out different reactions from the banks. But thus far, this language seems to be working. And the ones I've seen where they've had the most success is that they have a report. And Janet's going to talk about that. But if there's a report they can actually hand out, better a reserve study actually than a report, because a reserve study doesn't point out problems as much. And they get the reserve study, they say, okay, thank you, we have one. Even old ones they've been accepting. So
yeah, I agree. I mean, it's much better to rely on a report than interpret the report for a lender. But boards and our clients are trying to adjust to that, not just in Massachusetts, but across the country, because that's not something that really happened previously. Well, with that, Jen, I think I'll turn it over to you.
Okay. So I'm going to discuss for a few minutes of what the board can do currently, or what you should be thinking about. And what I like to kind of point out, and obviously as board members and attending the seminar, you're probably the cream of the crop, in my opinion, and probably the most diligent as far as being a board member. But some of it may be convincing your fellow board members, but your primary role, or one of the primary roles of the board, is to really maintain the common elements. And I know that everyone has the best intentions, and often board members start to consider the community, the impact of doing a large project, and things tend to get pushed off. I think we have entered a whole new world. The post-Surfside world it's different. The days of maybe never increasing common expenses, or being proud that your common expenses didn't increase for 10 years, it's not going to work anymore. We as associations need to really look at how we are operating these projects, basically. So what we have to do is really evaluate what you have, what your common elements consist of, what work is needed. Waiting for years or until the project declines into disrepair is not something that we ever really recommended, but we used to get away with it. And I think we're not going to be able to do that anymore based on, if we want to sell units and we're going to have to supply information, we're going to really have to be diligent about carrying out maintenance and repairs and replacements of the common elements. And I think the best way that the board can do that is through the use of professionals. Obviously, we, even as lawyers, we don't have the ability to determine whether or not the project needs the project needs or the structural integrity of the project. So if you engage a professional that can assist you with that, then you're relying on them. And that's good for a number of reasons. One, it helps with unit owners because it's not just you as board members making the decision. This is what the professionals recommend. If you need that professional opinion or report for these lenders, it's very helpful. At least you are not providing the opinion, you're giving basically what the opinion of your professional has stated about the property. So I think that that's an important step, having a relationship with the professionals. And today, because of Surfside, it's difficult to even engage professionals. I have clients, it's taking months to get an engineer out to do an inspection. So starting this process sooner rather than later will at least have someone on board for the association. You also heard tonight that having a reserve study is probably one of the easiest solutions to this situation. And I agree with that. I think lenders are just looking to check a box. And if you can provide them with the reserve study, one, I believe within 3 years, I think that's what they're looking for. Then at least you're not making any opinions about the condition of your property. You're actually just handing over this reserve study and they're checking the box. It seems to be working. So it's probably one of the simpler things to do. But again, it's something that you have to kind of put into the schedule, put into the budget and get done. Structural inspections. Now this works both ways. So if you have a structural inspection and you pass, that's a great tool, a great report to be able to give to lenders, because that's one of their primary concerns right now. Because of Surfside, they think every building is basically going to collapse, or they treat it like every building is going to collapse. So having that report, especially if your association is in good physical shape, it's possibly worth the cost of getting that report because it will support the fact that your association is in good physical shape. Again, addressing deferred maintenance is really something that boards have to consider. We can't really wait, because if you wait, your property may go on the quote naughty list, and therefore you won't be able to sell units. And obviously that impacts everybody because it impacts, the value of the units at your association. So addressing these physical components is really a primary role. Another primary role of the board is proper funding. Okay. And I think that going through budget increases is one of the easiest ways to somewhat, increase your reserve contributions. And if you do it over the years with steady budget increases, that kind of takes the sting out of it for unit owners. You heard Mark say earlier that Fannie and Freddie want to see 10% reserve contributions. They do, but that's probably inadequate for most associations. And having a reserve study would give you some indication of what the actual amounts are that are needed to go into the reserves. So it's helpful in that regard. Having reserve contributions is important today, I think, because it does show that your association has some financial ability. It's good if you do want to get an association loan. They look at those types of factors when they're considering whether to loan to your association. So having a strong reserve account is great for selling units, for getting association loans, and just for actually having money to be able to carry out some of these maintenance and repair items that the association may need to. So it's important. And so we talk about increasing reserve contributions, and we look at different ways that we can do that. And there's a couple of different things that can be done. Some associations have looked at, oh, could we lease a portion of our common area? Is there anything that you have where you can increase contributions to your income without having to increase fees? And that's one way to do it. Other associations are amending their documents to create a transfer fee so that when someone sells their unit, there's a fee that's paid at the time of the sale, and those funds go into the reserve account. So this is another way that the association can actually increase the reserve contribution without increasing your budget. Another important tool, I guess, in carrying out the necessary maintenance and repairs has been association loans. They're fantastic. They have allowed many associations to carry out the work that really needs to be done. I mean, many of the associations are over 20 years old and they need substantial work. And association loans, it's a loan that nobody guarantees personally except for the association, and the collateral for the loan is the right to collect the common expenses. So there's no mortgage that's put on any property. It's the right to collect those common expenses in the event of a default. So it's become a very valuable tool to associations in carrying out these large projects. Multi-million dollar projects basically can't be done without some sort of assistance from a loan. Otherwise, unit owners aren't really able to pay large assessments or huge budget increases, and the association loan allows you to kind of increase fees, but at the same time, carry out the necessary work.
Yeah, that also goes to making sure the property is still marketable, not having huge assessments.
Right.
Which is really important. Right.
It does offer the association an ability to do a large amount of work and still keep your unit owners being able to afford to live at the association.
Now, this is obvious because what the loan does, it spreads the payments out over years. Now, it used to be a 3 or 5 or 10-year loan, but there's 30-year loans out there now for associations, which sounds crazy, but they're spreading the cost out over the life of the amenities that you're fixing up, your roof and your streets and your roads and everything else. So it really spreads it out for a long time now. And
that also allows unit owners to have a few years or a year to save up money. You can use the loan proceeds for the first part of the work, but also raise the money over 2 or 3 years on the other half.
Right. There are a number of different ways that the assessment can be made that offsets a loan. Some owners are able to pay up front, some pay over time. So there's a number of ways, but the benefit of a loan is really tremendous. I can't say enough about it because I think it offers most associations the ability to do necessary work and basically, not bury unit owners with assessments.
And most documents, right? Most condominium documents specifically allow it.
Right.
So if that's a question.
We're getting there.
Yeah.
I'm sorry.
Don't skip ahead.
Where does it say that? I'm sorry.
It's down below, like the fourth point. Okay, but let's talk about special or supplemental assessments for a minute, because you heard Mark say at the beginning that special assessments are a red flag. Okay, so the special assessments from our perspective as lawyers is bad for a number of reasons. The first is it's not protected by the super lien in Massachusetts, in Rhode Island, and in New Hampshire. So we really never wanted associations to ever really levy a special assessment. Okay, we would prefer that you increase the budget and add a line item and add a temporary monthly fee if you have to separate it. Ideally, it would be best to include it right into the budget and have one monthly fee. But second to that, or a second approach to that, would be at least a temporary monthly fee that would be in effect. So the second benefit of doing it this way is that we avoid the use of the term special assessment, which is a problem under the super lien and is also a red flag for lenders. That's what they're looking at. They're looking at special assessments. Even if they're paid, they are still looking at special assessments. So it's kind of a red flag to them, because they look at it and they say, oh, there was a special assessment. Oh, that meant that there was work done. Now, it should be beneficial that there's work done, but for some reason, they don't really know why they're asking all these questions, and they're not really sure what they're looking for. So they see this, and it kind of creates an issue. Obviously, it's typically one that we can explain, but if Mark is correct, and at some point they start to say, well, we're not going to lend until the work is all done, then special assessments are really going to be much more of a problem, because they're going to raise the awareness of the fact that there's ongoing work that's not necessarily complete. So we strongly advise that we stay away from special assessments and supplemental assessments, and simply change essentially the terms and put it in directly into the budget. Another approach to dealing with this current situation is communicating and educating unit owners. I think it helps. If you do that, then at least when they go to sell their property and they get pushback or there's an issue, they were sort of made aware of it. Now, it does require them to read it and know about it. And I've had associations that have actually put letters out there and still had the issue when the lender came back with questions, and they knew nothing about it, despite the fact that the association had sent information out to unit owners so they would be aware of it. But I think it is beneficial, because some people will absorb it and they will understand the issue and know about it. It's also, we find, at least it's been helpful to maybe even encourage buyers to go with local lenders, because local lenders may not be selling their mortgages to Fannie and Freddie, and therefore they may have more flexibility in terms of taking the loan without having to answer these questions. So it's, I think, beneficial to the association and to board members to educate unit owners, because at least they know about it. So if there's a problem when they go to sell, they will have some idea that it's not the board, it's not the management company, but this is the situation that we face right now. And the other point that I wanted to bring about was that we do need to check your documents, okay? You need to understand what's in your documents. For example, most documents, as Richard pointed out, do give the board the authority to borrow funds, but not every association's documents allow you to without votes of the owners. So we have to look at the documents, and we have to make sure we have the right to do it. In very rare instances, some associations have to have budgets approved by unit owners or supplemental assessments approved by unit owners. So you need to know what's in your documents, because you need to know what you're going to be dealing with if you need to carry out any type of work to your common elements. So it's important to understand what's in your documents and maybe consider amendments in advance that would, eliminate the issue or give you the authority or clarify your rights. In states like Rhode Island and New Hampshire, you can't increase your budget without a ratification process that has to go through the unit owners. Supplemental or special assessments depend on the documents, although in New Hampshire, even supplemental and special assessments have to be approved by the unit owners. So that you do need to know what the law is and what's in your documents, and deal with that probably in advance. Remember, in Surfside in Florida, the association down there did not have the ability to simply just increase the common expenses. It necessitated a vote of the owners, and they never were really willing to do it, which is why the work wasn't really able to take place. So unfortunately, even though the board was trying to do the right thing, the owners were really preventing it. And that's a problem. Because at the end of the day, everyone really does get sued, and it's unfortunate, but I'd like to think that hopefully that was just a one-time situation, and we don't really have to face decaying buildings to that extent. But I still don't think they even really know what caused that structure to come down. But there were a lot of parties to the lawsuit that were involved.
A large settlement amount.
Yes, huge. huge settlement from neighbors, neighboring properties, property managers, law firms, the association itself, the insurance company. So, I mean, this whole situation is even going to impact your insurability, I think, too, because insurance companies are also wondering, are these buildings being maintained properly? Because if not, and there's a loss or there's some situation like this, they are potentially on the hook. So they are starting to scrutinize your structures, and they may be looking for this information in the future as well. We don't really know what's going to happen down the road, but that's a very strong possibility that insurance will be scrutinizing things as well. You know, the insurance companies will be scrutinizing things more. And also we may see legislation. Florida just had legislation passed, which requires some inspections. I don't think it's overburdened, but it's something, and I assume at some point that may trickle north and west of Florida. So we may be seeing this, you know, from a statutory standpoint as well down the road. So I think we have to get used to it. We are in a post-Surfside world. I guess that's what I really had to say, and we can go to the Q&A.
Janet, I don't think you may have said this, but maybe I missed it. Maybe you didn't say it. The reserve requirement is also in the Massachusetts statute. So even though people kind of ignored that.
Adequate reserves.
Yeah, adequate reserves. So
whatever that means.
Right, whatever that means. But we put that in probably 25 years ago when problems started coming up. So no matter what, I mean, I know Janet beat it to death saying you have to have reserves. You have to have reserves by Massachusetts law.
Right.
So just real quick, because there was a Q&A on that. The 10% in reserves, the question was, could you show through a reserve study that you're fully funded? Would you still need to keep putting in 10%? So these regulations actually changed the exception for Fannie. Fannie used to say, okay, if you can show you're fully funded, then you don't need to do the 10% anymore. They actually rolled that back on theirs. Freddie, you still can make that exception.
Okay.
There's about.
So we're going to go through the questions now?
Yeah, there's quite a few.
All right. Okay. Who's doing that?
Start from the top.
I'm still trying to change the page on the screen. Okay. For some reason, it won't just change. Okay. But I got it. All right.
Starting going to the top.
Okay. Who are you doing this, Mark? Did we decide that?
Yeah.
Okay. You got it?
Yep. So what liability considerations when a board tries to amend association docs to increase the budget and the owners vote against it? I'm assuming the trustees are still liable. Well, that's an interesting question. It's always, you know, the board does have the duty to maintain, repair, and replace the common areas. And it kind of goes to what Janet was talking about, doing ahead of time so you don't run into that problem, because potentially it does not alleviate the board from being liable for not doing a repair just because they're not funded adequately. Any of you want to chime in on that one?
Are you in the Q&A?
Yeah, it's like the fifth, like the 46th question.
Okay.
He didn't start at the top.
He did. Okay. Okay.
Should we go to the top?
Yeah, it might be nice to start at the top.
That was number 46 out of 51.
Really?
Yeah.
All right. I would start at the top, just generally.
I'm scrolling up.
I scrolled all the way up. Okay.
The first question we answered already, it applies in every state. I don't know of any state that requires the lender questionnaire to be filled out. So that's the answer to number one.
Yes, it's definitely in every state.
Yeah, but I mean, a state, some state could have a law that requires a questionnaire that we don't know about, but not around here. So the second question's David Fisher. Is that where we are? Which I think Mark already answered.
Yes, he did.
Okay, so we'll go to number 3.
Okay.
The evacuation question, which I thought was the most interesting of all. So Kathy, you actually had an evacuation. You're going to have to disclose it, but I don't know. We don't know the answers, but Kathy, if you've already affected the repairs, then they shouldn't be an issue, right?
And they also say that, I mean, I one of the things that the lender has stated is that if it only impacts a few units, now I know this is 5 units out of 66, but there is the possibility that because it's only 5 out of the 66, it may not be a problem. And it's certainly, hopefully not one that they're going to be lending on. I think that that would be a problem. So
I have a question. Can people see these questions besides us?
Yes.
Yes.
They can?
Okay.
They can see the
Yes.
screen?
Yes.
Okay.
Okay. Because we weren't reading the questions. We were
I
answering.
think so.
I don't know about
Someone,
that.
someone
Maybe
said
we
you
should
should
Somebody
read
read
raised
the
their
question.
hand. Wait.
No, not all questions. they're saying.
Okay, no.
We'll read the,
We should read the
All
question.
right. Thank you for that.
Okay.
you
So we'll
for-
go to question 4. We should read the question. Mark, why don't you read the question?
It's from Matt Larson. Is that what you're
Right,
looking at?
correct.
Yes. I don't think we have to identify who is asking.
Well, I only did that so I would know I was looking at the
Okay.
same question as
This
you.
better be a good question then, not a dumb one.
Of course it is. Matt knows what he's doing.
On special assessments versus budget amendments, do the banks recognize the difference and will they treat each the same? So I think what that goes to, yes, they so far, we've always been successful to argue that a supplemental assessment is not a special assessment. If I believe that's the question.
But if you're asking the question as far as the Fannie Mae, the questionnaires are concerned, we don't know for sure. But just do the budget amendments.
Yes,
It won't
well, I
be a
mean,
red flag.
Yeah, the special assessment is definitely going to be a red flag. I think that would, in my opinion, include a supplemental assessment. The budget amendment is the best.
Correct.
And we will make the slides available. That's another question after the seminar.
Okay.
I already emailed our office person to send
Okay.
it out to everybody.
It is being recorded as well. Okay.
Okay, let's see.
Are reserves of 10% not a requirement at this time? So Mark, did you answer that?
That was the one I answered, yeah.
Right, okay.
Okay.
Do I understand correctly? If someone is applying for a mortgage, a potential lender will now send out this questionnaire being discussed. Potentially, yes. Not every lender, and the addendum that I mentioned is, quote, optional for lenders, but because the lenders have to certify to Fannie and Freddie, they're most likely going to ask some sort of questions that are related if they don't use this particular addendum. Local banks, as Richard said, because they're not selling the mortgages on the secondary market, may not be as concerned, but they still might.
Which, by the way, we talked about this before the seminar. We don't know the answer to this, but it's possible that if any of you out there have a condominium association where no building is more than 4 units, it's possible, we think, that you might say that's the answer to all the questions. Say our building's not more than 4 units, this shouldn't apply. We don't know if that's going to work, but we're throwing that out there if you have an association that's all 4 unit or smaller buildings.
Right.
Where are we in the questions?
So this is the question. I see this expansion of over due diligence as likely to weed out potential resident buyers and tilt more towards deeper pocket investor owners, a trend that started after 2008. Is there any way to mitigate against this? It's a good point. I'm not sure. And that goes to, does the lending industry reverse course if that's an effect, that they're weeding out first-time home buyers or low income? That's something that I don't know yet.
Okay.
Mark, you skipped like 5 questions.
Yeah, I didn't know where he was either.
Yeah, because some of them are, you can read it, Richard, but some of them
because you already read them? Okay,
some are repetitive.
Okay, sorry,
Oh.
didn't know that. Okay, we'll
Okay.
we'll rely on you then. Okay.
All
Okay.
right. I'm trying to get the most out of it.
Okay.
Apparently, I'm not doing a good job.
No, we just didn't know why you were skipping
You're
it.
confusing us.
Well, because it's 10%. Yeah, trust me.
That's all right.
I'm really
You
good.
do it.
I'm trying to do it.
You do it. We won't complain.
Oh, I don't think that's possible.
Okay, that's
Um,
probably correct.
Our building is in the midst of a construction defect lawsuit. We have already spent $1.5 million on repairs, fixing the most serious problems, but not everything. Do you have any more specific advice for trustees and buildings in our situation? Richard?
I'm going to say you're going to have to it's unfortunate. You have to disclose what's going on. It may not be good. It may not make anybody happy, but if you hide any of this information, you're subjecting yourself to liability. So
Hiding as a general rule is not good.
yeah. And think about this. Never mind the banks. You have a new buyer buys and they just don't know what's going on for some reason. Then they start blaming, they'll blame you guys. Why didn't you tell me about this? I had a unit owner that bought in a building. There was a hole that was dug for construction of a new pilings they were going to put in. He bought, he didn't ask a question. He found out 2 weeks after he bought that there was an $8 million assessment to straighten the building up that was falling down. I mean, if he had asked any questions, that he would have found out. So you want people to know. You don't want, nobody wants to hide anything. You don't want to have unhappy buyers. So you're just going to have to disclose it. It's just how it goes. And hopefully the defects will be fixed, and hopefully you'll win the lawsuit. And hopefully this lawsuit is with our office, actually. But that's what you have to do.
Quick question on the reserve report. Who prepares the report? So for those who don't know, it's typically an engineering firm that would prepare that. And they're basically looking at what the life is of certain portions of the building, the roof, etc. Let's see.
Oh, look at the next question. That's the one we were talking about earlier. If it's all 4 units. So, John, if you do that and you find out that they accept that as that's acceptable, could you just let us know? Because we're trying to, everyone's feeling their way through this. We'd love to know that they're accepting that as an answer.
Just make sure you read the question, Richard, because they can't.
Oh, I'm sorry. John's question was, if we have 65 freestanding buildings with 4 units in each building, we exempt from the requirements because there's only 4 units per building. So we were thinking about that before the seminar. We haven't heard of anybody saying that. It would make sense. So, John, if that is in fact the case and you communicate that to them, see if they accept that and just let us know, because we can put that in our next seminar.
So is the needed report one generic report for each condo association, or does the report/questionnaire have to be completed each time a potential buyer applies to a bank, mortgage company? If it's a one-time report, is it good for only so many years and then would need to be done again? Janet, did you want to address that one?
Okay, so I assume they're referring to the reserve report or the engineering report?
I would think the reserve report.
Okay. Well, no, that report would be that would be the one report, and it would probably be valid for a few years, and then it would need to be updated. But each time the buyer applies to a lender, they may have their own. They're going to have their own questionnaire. Right. Many property management companies have kind of a standard form filled out already, likely for your association. So they have this somewhat completed to some extent, because we know what the questionnaires are.
Right, and the fact that they do it each time is problematic too, because a lot of property managers get these multiple times in a week.
Yes.
This is an excellent question. Will you please speak to whether or not certain information being requested by a lender's representative, such as engineering report, be provided if the report has not been provided to the current unit owners? Sometimes the planning portion of the project is just getting started during the time these lender requests are received. It is difficult to decide when to share and when and to whom.
I've had this question. I'll tell you what, I've answered this question. I've told them it seems odd, but I'd give it to the lender, because just fast forward, we now give it to the owners, but we didn't give it to the lender because the lender wasn't entitled to it yet. And then there's a problem, and they'll say, why didn't you had this report? So once you have it, you're on notice of it. So give it out. It might cause a problem with some owners that might say, why did you give it out to the lender? But the owners wouldn't even know that. And you're probably going to give it to the owners fairly soon. So I think once you have a report, whatever you have, you just give it to the lenders. How do
you feel about making the lender sign a non-disclosure before you give it, so that they have to keep it confidential?
Yeah. That's being overly careful, maybe, but why? There's no harm in it.
Well, I mean, that might just protect it a bit more.
Yeah, because you don't want people getting upset that the lender knew about it and the owners didn't, because then the owners might say, why don't we know about it? So you want to try and process it.
Right, and of course the caveat is if it's prepared in preparation of litigation, you wouldn't be giving it out.
At all.
Giving it out at all.
Which is also difficult. So now you're hiding something from the lender. So I know that's a tough one. I don't know what I do in that situation yet. I haven't had that
Well,
one yet.
that's when you can give the response that Mark presented in his slide, which is we're not aware of any
We're not
condition.
answering.
Yes.
Yeah.
And you're responsible for your own evaluation,
Okay.
basically.
Right. We are in the middle of many large repairs to our building involving water management. We increased our condo fees and have a $750,000 loan coming in shortly, and will likely not cover everything. Given that the work is underway as a phased effort over 2+ years, when would it make sense to have a reserve study? I might ask the people doing the reserve study, to be honest with you. On
Yeah,
that.
I mean, if major components are already going to be in process of repair, I would say not until that's completed, I would think.
Yeah, or yes, exactly.
Because what would be the point? I mean, the reserve wouldn't be able to, I mean, it would say that those components need immediate replacement. So,
Yeah. And this is a question about the influence of Fannie and Freddie. It kind of goes to Richard's point about there are other funding options, just that Fannie and Freddie, when they guarantee loans and they guarantee on a secondary market, they make up a lot of mortgages. So if you don't qualify for those two, you're knocking out a lot of potential buyers.
yes, definitely.
Does what part of the country you live have any determination on the need to the report for lenders? For example, buildings in Florida are built on a different landscape, may use different types of materials, and maybe different land materials and mass. I guess I will say I can't answer for every state, but in Massachusetts, and Rhode Island, New Hampshire, and Maine, there's no obligation to give this information out. Jenna, you want to add anything on that one?
No, I mean, it can be state specific in that regard. So I don't think
Yeah.
I mean, I don't think they're evaluating. This seems to be happening across the country, right?
Right.
I mean, the lending requirement, they're looking at it across the country. Whether they accept it on different conditions for different states, I don't know the answer to that.
We're hoping that as this thing evolves, they'll start being more realistic and say, okay, a building collapsed. It was near the water, so it had all the issues with the ocean and salt and all that. And it's a high rise, and they start thinking, okay, maybe we need to look at any buildings over 4 or 5 stories high that happen to be built in an area where they're more likely to have rot and over a certain number of years old, because it doesn't make sense to the shotgun approach to cover every building in the entire country.
Yeah.
What they're doing. So we're hoping they'll revise it because they'll see the pushback, which is why we're encouraging our clients to push back. If everybody's pushing back in the whole country, they'll say, well, maybe we're asking for too much.
Right.
I always make the joke, why don't they ask us just to guarantee the loan while they're at it if they want us to be so involved in the process? So it doesn't make sense for us to not push back at this point, just to see what we can get. And it's working so far. The loans are going through as far as we can see.
If these new requirements have a dampening effect on sales and refinancing nationally, is there political pressure being applied to Fannie Mae and Freddie Mac?
Well, I know CAI has
Yeah.
been working with Fannie and Freddie to try to get them to alter these requirements. And it's hopeful that something will evolve out of it. I mean, these are only really, they went into effect. Well, technically, they were really going into effect in January 1 of 2022. So we're only 5 months in. I think there may be, or 6 months, I guess, there may be some alteration, but it hasn't happened yet. But CAI is working on it.
And just so you know what CAI is, it's Community Association. Hi, Claudette. It's Community Associations Institute, and it's a national organization which helps with legislation and education for condominium associations. So any of you that aren't members, it's a very worthwhile organization. The local chapter is in Wellesley, and if you email us, we can tell you how to find Claudette, or you can just Google it and you'll find it in Wellesley.
Yeah.
So CAI, the chapter in Florida and nationally was heavily involved in the Florida legislation that recently passed.
Janet, you talked about amending documents to add transfer fees. What's the average amount you're seeing?
I have seen recently 2 to 3 months. I have some associations that have done percentages. I do caution on percentages because obviously, that's a much more substantial amount, but 0.05% has been done in. It's a little tricky when you do a percentage because it's not something you can calculate until the deal closes. When you do a number of months, it's much more easier. It's much easier for the board and the manager to, include that information, with the 6D certificate request. So I just did one for an association where they did 6 months of fees.
And by the way, everybody, this is a brilliant idea. Janet's been pushing it lately, but it's really, you're talking about collecting money from the owner on a sale that goes into your funds, which was very similar to what happened when the condominium was formed, because the developer was required under Fannie Mae regulations to collect 2 months from every buyer at the closing on the first purchase. So it's kind of an easy sell, and it brings in money without a lot of people fighting about it. So Janet, when people have put the vote out, has it been passed fairly easily?
Yes, because obviously the provision can say whatever you as the association wanted to say, but most associations put the burden on the buyer. So none of your current owners have to pay it. It's the buyer that ultimately pays it. And therefore, most owners are okay with approving that amendment because it doesn't technically impact them or come out of the sale proceeds. Now, I'm sure maybe a buyer would take into consideration that they have to pay this, but it's been fairly successful.
And Richard, would you just go over the exact language between a budget amendment, a temporary fee, and a special assessment, just to clarify?
Okay, so a budget amendment is in the middle of the year. You decide, we need more money in our budget. So you basically vote for a new budget with the new amounts in it. And then the condo fee changes based on that. It's as simple as that. It's almost like the beginning of the year when you set your budget. A temporary fee is when you say, well, we're not going to amend our budget. We're just going to increase the condo fees by having a temporary fee. Sometimes it's an extra amount, or sometimes it's, hey, the condo fee is going to go up, whatever, an extra $50 or whatever it is for a temporary period of time. And you want to tell the owners it's temporary, so they don't get all nervous that it's going to go on forever, because that's the big hesitation is, our fees are going up. They are going to go up, but it's temporary. And what was the last one?
Oh, just
those two?
Special assessment.
Oh, is one preferred over the other? Yeah, the budget amendment's the best. Nobody can really question it, right? This is what our budget is. So banks, when there's a question on the super lien, they see the budget. They see the condo fee. A temporary fee doesn't stand out that much if it's a new number, but if it's an additional amount, like it's 2 fees each month, it stands out more. So the simplest, best way you can do it is amend your budget and just increase the fee, and then you're done.
There is a question about optional cosmetic projects and whether they will cause a problem. I would not think so, but they're really looking at structural integrity and deferred maintenance rather than, upgrades. But of course, if you do it by a special assessment, that could be causing all sorts of problems.
Well, it might just cause them to look at it or question it, but in theory, it should be okay.
It should be okay.
And Mark, the question before that, I think they would, a little clarification. They want to know special assessments aren't covered by the super lien. That's as simple as we can say it. So if you put a special assessment on your ledger and it says special assessment, and the bank is about to pay off someone who's in collections, if they see special assessment, 9 times out of 10, they just don't pay that amount. They say, it's a special assessment, we don't have to pay it. If it says almost anything else, just avoid those 2 words. Anything else, condo fee, supplement, all those things, they just pay it. So it makes no difference to anybody in the world. So just don't use the word special assessment ever.
And the notices regarding the assessment should also not use the word special assessment, because they do tend to look at that.
And along the same lines, how do you handle charging the unit owners for a loan that is covered by the super lien?
Well, if you call it a condominium fee increase, or again, anything but a special assessment, it's going to be part of the super lien, because the super lien covers condo fees, and now the loan is part of it. Some people, though, put a separate line item, if that's what you mean.
Yes, I think most associations like a separate line item because they they want to be able to say, well, this is really the base fee and this is the extra fee, which is really a special assessment, but we've called it a temporary monthly fee, and that does seem to work. But you still should revise your budget so that within your budget is the line item for this temporary monthly fee.
We can't have any seminar we ever do without discussing special assessments.
No.
That's true. To what extent are mortgage loans now being declined by lenders as a result of condo associations not meeting the new requirements? Is it already widespread? I'll answer from my own experience. I haven't seen it as widespread, and I don't think our office has either. This is more because they're, relatively new requirements. We're trying to get clients to adjust and be ready in case that does happen.
I've seen two which were a fight, but we don't know what happened in the end. We think they probably went through. And the person that does the most of these in this office, we asked him yesterday, and he said, no, they all seem to be working out and going through. He's not seeing it. And we probably would hear about it because we get a call from somebody saying that the loan fell apart and everyone's furious with the management company and the board. So I think they're going through still.
This is directed to you, Richard. If a board says we reject what the details of the engineer report as not reflective of the actual condition, does this engineering report need to be made available to the lender, or can we just file it away? Anytime you file it away, it doesn't sound like a good...
If a board says we reject what the detail... So the board's rejecting the engineer's advice?
I would have another engineer that has a different opinion if that was the case.
Yeah, I mean, the engineer's going to know more about the building than the board, I would say.
And I think that would be appropriate, because then you have at least another, if you don't trust the engineer or there's other problem, find another engineer to review it and get a second opinion. I think that would
yes, definitely.
I mean, fast forward that whole scenario, and then there's a problem with the building, and we say, well, we didn't believe that engineer's report, so we just didn't give it to you. That's not going to fly. You need to do another one.
Okay. We're replacing the only elevator in a 6-story building. Some people are moving out for the 5 weeks the elevator is down. Is this an evacuation? I love these scenarios, but
I love that, David. That's funny. Yeah. I would think not,
right?
But I guess if you disclose it and they think it is,
I don't think
it's not a state or authority ordered evacuation.
Right.
It's a voluntary one because people can't use the stairs.
Well, Janet, why do they need an elevator, huh?
This one's near and dear to my heart. I've had this issue. I mean, unfortunately, we can't guarantee that the common elements are going to work 100% of the time. And elevators, they provide a necessary means of accessing the other floors, but it doesn't work all the time. And a lot of the older elevators, you can't even get the parts, and it takes months to carry out the repairs. So again, we try to explain these to unit owners, and they somehow, they just feel that the board should do something besides do the repair. And I don't know what else you really can do. I mean, in that scenario, you really have no choice. I mean, you do the best that you can and you explain it.
Mark, does the supplemental questionnaire, this part, does it ask specifically about an evacuation? I haven't done a lot of these.
It's not in the addendum, it's in the lender requirements. So for lenders,
okay, so they're not asking it then.
They're typically not asking it, no. Not on
so
that.
I guess it would never come up. I guess.
Well, if there is, I don't know. I think it might come up, and it would be a problem if it did. If it was,
Okay.
Richard, you might want to take this one. In light of all the issues with lenders, our development is individual homes. Roofs, siding, and roads are looming in this 1985 development. Would it make sense to change the declaration to say that unit owners are responsible for all exterior maintenance? So I think the first part of that is if they're individual homes, they probably don't run afoul of these requirements, which are buildings with 5 units or more.
Yeah.
I mean, I don't like it when the unit owners are responsible for things on the outside of the building because of there's many different reasons, but don't you want to have uniformity and make sure it all gets done? and some people can't afford to do it, so it's not going to be done. If the documents already say that, it's fine. Everyone bought in. But I also think that it may make sense to do it in your mind, but good luck getting the owners to vote that they're going to maintain their own buildings, even though it's the same thing in the end, because they're paying for it one way or another. So I don't think so.
They would usually have enforcement powers. So if the unit isn't being maintained, the board can take action against that owner. So it's in an individual, single family detached. It's not uncommon to have the owners maintain the exterior as well.
So just in terms of time wise, we're a little after 7:30, but we obviously can go as long as we need to.
We'll go until there's only one participant left.
So that would be you.
That would be you. Then. That's what's going to happen.
We have 93 questions. Who knows how many more?
Yeah, I don't know. I kind of lost track of the questions because I don't know where we are on the question.
Well, so going back to the 10% in the reserve, is it 10% of the fees or 10% of the budget? Total budget.
Do you want to answer that one, Mark?
I'm asking the questions here.
Oh, okay.
I believe it's a total budget.
Yes, I agree.
That's how I've always seen it.
Mm-hmm. That's what it is.
And understood it.
I don't even think they checked to see if the 10% went in. They just want to see that. And I've had this issue actually, where the budget had slightly less than 10%, and the bank would not accept it. They had to increase the budget to 10%. Had nothing to do with the money actually going into the reserve account, just the piece of paper that the budget.
Right. And it could be $5 in the reserve account. Too.
Yes, exactly.
Okay. If someone pays for a questionnaire to be filled out by a management company, is the management company still not legally required to answer those types of questions, structural and other violations? They're not.
I like that one.
Go ahead, Richard. You take it.
I like that one. They're still not legally required to do it, but now you're paying for a service, so they're gonna fill it out. But that does not mean that they're going to give answers that the lender requires to do the loan. I mean, if they want a yes or a no, the management company doesn't have to say yes or no. They're going to say, look, you pay us to fill it out, and we're going to fill out what we know to the best of our ability. And unfortunately, sometimes I've heard this. Well, we can't believe you didn't answer the questions the way we wanted them to be answered. Well, we're answering the question. That's what you're paying us to do. We decide what the answers are, not you.
Right.
And what questions can be answered? Some of them can't.
Right.
Some of them can, and some of them are simple. The ones that used to be there in the old days that were simpler questions.
It would be great if you could ask a question and dictate the answer.
Oh, and they do that. We've seen that. Well, I've actually seen too, and I told Mark about this, where somebody that we don't even know who it was filled out the questionnaire and signed it and sent it into the bank. Twice I've seen it already. We don't know who just someone did it. It wasn't the management company. We don't know. We never found out who. In one of them, the board then submitted new answers saying, we don't know who filled that out, but it's not true. Here's our answers. So interesting that this fraudulent Fannie Mae answers going out there.
Clarification on a prior question with regard to the ramifications of what I interpret as first-time home buyers and low income. It's not just that. What about people who can pay cash and beat out those who have to take out loans because of the extra, and they're subject to extra due diligence? Well, that's true, but I think it's always true with a cash buyer versus someone taking out a loan. So it may exacerbate the problem, but I think it's still similar.
Okay.
It was a long one, so I'm reading it. Our association voted and approved amendments to the Declaration of Trust in 2015. I serve as a trustee. So now the board is required to have a reserve fund and review it every 2 years. The board is required to fund the recommendations. Our property is well maintained and funded. That's the good news. Trustees do not receive complaints. No assessments since the community adopted the amendments. I guess that's more of a comment.
That's very good, actually.
Yep.
But I don't think it's a question, but that's great.
I'm interpreting this question as to how do you balance not spoiling the sale and walking the fine line of trying to be cooperative and providing information. I think it depends on the circumstances, but
that's the $64,000 question.
Yeah,
that's Mary Ann asking the question, Jan.
Oh. She knows what she's doing.
It is a balancing. I mean, but think about this. You're trying to balance something. And that person you're trying to, on one side of it is the, did mine just shut off? So you're shut off?
Yeah, I know. I got to go back. I don't know what I'm doing.
It's someone selling. So you're trying to balance the good of the entire community against the person that wants to sell. So you really should be thinking about, well, maybe it's the community that's more important, not the seller.
I'm stopping this year. Couldn't go back.
So you try to balance it, but you got to do what's right for the entire association, and that's what we tell people.
What is your opinion about boards that get a reserve report and then get quotes and change the reserve schedule? Or if the reserve report calls for a coating on a parking deck, but the board does research, then decides no coating is necessary, is there a liability for them?
Well, they're supposed to use a reasonable judgment.
I think there's some flexibility. They have a reserve study. I think that's going to check the box for the bank. I don't think they're going to check beyond that.
Yeah, and I guess from a practical standpoint, although maybe it'll get like this, most associations aren't able to really do everything in a reserve study.
Right. Especially if they're starting, 10 or 15 years after the reserve account should have been funded.
Right.
Mark, there seems to be a number of questions we're kind of flipping through that talk about how many years for reserve study. I think the regs say, or whatever these guidelines, they're 3 years. But I know I gave one out that was 6 years old already. And I think, I don't know what happened after that, but it seemed like everything was fine. They just wanted something.
Right. 25 years would be too long, I would say. that was one. Paraphrasing.
Yes.
Let's see.
And some people hate reserve studies. They think they're a waste of money. But I think that's because they don't really use them. They get them and they put them in the drawer. You need to kind of use it. Otherwise, why do it?
This is a comment, I think. For those communities with less than 5 attached units, we have answered as such and noted the property is not subject to the questions in the lender's addendum. We don't know, though, whether or not the lender granted the loan for the mortgage. Yeah, I mean, I run into a lot of underwriters that don't really understand the requirements either. Also, so I'm not surprised if someone is sending the addendum for a property that actually isn't even covered by it.
Oh yeah, definitely. It's just an automatic reflex, I think, that they send it out, and so it would be up to the association to say it doesn't apply.
What would, I'm sure this is on everyone's mind, what would some potential exposure be if information to the lenders is accidentally incorrect?
That's a kind of a complicated question.
You're putting it in writing.
I don't think there'd be liability just because. I mean, unless it was done fraudulently, but they're saying.
Yeah, right. I guess the question is, what does accidentally mean? If you're saying, you're answering something that you couldn't have answered or you shouldn't have answered without looking into it, is that an accident? Right.
But what's the harm to the lender?
That's good point, Janet. Because that's very important. If there's no harm in the first place, there's no issue. The harm is the case we had many years ago where the owner wouldn't have bought, or if a building collapses. So a lot of times no one's going to know there's harm, right? Who knows if the buildings have got a problem 10 years from now? But if there is harm, there's a lot of exposure probably, because if you told them the wrong answer,
right,
they lent money based on that, especially if they paid $250 for the answers to the questions. They can say, we paid for it, we got the answer, it was incorrect, we would never have lent the money, and now we lost money on the project. So I think there's exposure.
And this question goes back to something we did raise, but should we give owners a copy of engineering report and reserve study? Most of the time they're entitled to it as a record of the condominium, unless
I'm not sure about the reserve. I'm not sure about the engineering report.
Unless it's done for litigation, why wouldn't you get it? So
I agree.
I don't know about that. I might disagree. Well, on the engineering, the reserve study, definitely.
Oh, I agree. I think
your study on the common areas, you wouldn't make that available?
The engineering study.
Yeah.
Yeah, possibly.
I would make it available.
Yeah, I would too. Janet.
All right, 2-1.
How can an association acquire a 30-year loan?
They're out there.
There are lenders.
Yeah.
if you email us, we can get you a list of lenders that just generally do condominium loans. We've just put together a list over the years because we do a lot of closings and we see them all. So we have that list if anybody wants it.
We are planning on doing a building envelope project in 2 years. There are regular maintenance issues that have been put on hold for 3 years now in anticipation of building envelope project. Sorry, okay, so I was wondering why it ended. Sorry, hit send without completing the sentence. Should we be concerned about the issues that we are currently deferring? So they've got a building envelope in 2 years, regular maintenance issues that have been put on hold for 3.
Well, if the ones you're putting on hold don't affect the safety and soundness, all the list of things that they're looking at, it shouldn't be an issue. So it depends on what type of things there are, but they could be an issue if it affected the safety or soundness of the building, habitability.
This is interesting. Please reinforce about, I'm going to change the question a little bit, whether all disclosed knowledge needs to be disclosed to buyers. I'm a realtor, a trustee, and a mentor of the Board of Realtors. Their arbitration, professional standards, board disclosure should be emphasized in this discussion. So there's a difference between, the duty to disclose for a seller or someone on the board versus a realtor or broker. A broker and a realtor would have the duty to disclose. A board member would not have the affirmative duty to disclose anything to a buyer. But if they were asked a question and they answer it, they have to answer accurately. And that really applies to the owner of a unit as well. Do you have anything to add on that one, Richard?
No, I think that's good. That's right. It comes up a lot.
And
this one's for Janet.
Actually, I would like to add one thing. What I say to clients all the time, and I know Mark and Richard do this as well, we always encourage clients never to discuss anything directly with the buyer. It should all go through the seller, that's the owner, because our relationship is with them. We give the information to them. It's up to them if they want to give it to their buyer.
Right. And in the cases where they want it sent to a third party, they can also have, an agreement between the buyer and seller signed.
Exactly. A hold harmless and a indem.
Exactly. Yeah. I think that's my
next question for Janet.
No, I can't see it.
What do you need to do to have transfer fees?
Well, you definitely need an amendment to your bylaws, likely. If it's a trust, then the bylaws are part of your trust document. So you need whatever is required to amend that document. It's typically the consent of a certain percentage of owners, 75%, 67%, some as low as 51%. So you would need to go through the amendment process to have the unit owner's consent to that amendment, whatever that required percentage is.
And the next question, Janet, ties into that. Any reason you can't do that for a 40B project?
No.
I don't think so either. I think it's fine. Can you see the questions again, Mark?
Yeah.
Although that is an interesting question, though, because then when the buyer, if the burden is on the buyer, but I think that would be okay. I don't
know why it wouldn't be.
That wouldn't violate the.
Yeah, I don't think so either. Typically, when they when they do a 40B, if it was already in the documents, then whoever is certifying that would have approved the condo docs, and if you add an amendment, it should apply equally. Right,
but I think in that association, you may have to stick to the monthly fee, the amount of the monthly fee as the transfer fee, or some multiple of that monthly fee. So not a percentage, because that might be a problem, the percentage of the sale price.
Mark, I just want to say in the chat section, it looks like people are telling us lenders that would lend, that don't sell the loans on the secondary market, because we don't really know. Someone put down Cambridge Trust, Cambridge Savings, East Cambridge Savings Bank. So just maybe some banks to give out names if people are asking.
Okay. Let's see. How much weight does an indemnity and release agreement hold as far as liability when signed by both buyer and seller before release of a condo questionnaire?
Well, it should work.
I think it's pretty good.
I don't know why it wouldn't work.
Both parties are signed, yeah. unless they say that, the
Well, I don't think you can have them sign that document and then lie. So you still have to be truthful in providing the information.
Yeah,
but
that goes to the accidental, release of.
Yes, right. As long as it's done in good faith and you're providing the best information that you believe to be accurate, I think that, but I don't think you could intentionally provide misinformation just because they signed that document.
Do temporary fees or supplemental fees have to be disclosed on the questionnaire? And if so, how, Richard?
I don't fill out these questionnaires anymore. So if they ask the question, which I assume they do, is what the fees are, you'd put down whatever the fees are. If it's temporary or supplemental, it still goes on the form.
Yeah, I agree. Sorry, if the question.
That's why we need to be in the same room. It's easier. Being separate would be harder. Because they're asking the question, they're trying to make a determination of the financial situation and if the buyer can afford it. So you want to tell them the truth. You don't want to lie on that and have the buyer not be able to afford it. And again, why just tell the truth.
Right. And if the question was, are there any special assessments? You would answer by saying there are no special assessments, but there are supplemental assessments.
Correct.
So you don't want to be misleading.
Okay.
How does an association collect a transfer fee? We collect a 6D fee before a sale, but after that, we are not involved in the sale. Does this get charged to a new owner when they start paying monthly fees?
I mean, if it can be set up that the seller pays it, but I think in order to get that amendment to pass, it's better to have the buyer pay it. And the way that it typically works is the 6D gets issued. It can note that there's a transfer fee, but what happens is after the closing, the transfer fee gets applied to the account of that unit and paid.
There's one very off topic. So, and the question recognizes that. So I'm not gonna sidetrack because we're a little late in time, but I'm happy to answer that question offline. Can a property management company have standard questionnaire responses? Or can these lenders ask them to fill out their forms?
Well, for Mark, I don't know anymore, but I know for a long time we had a standard questionnaire response. We put together basically responses that covered all the questions we saw on all the different questionnaires for a while, and that worked. But I don't know. I know people still try and use them. I don't know. If you have one put together, I'd use it and see if they'll accept it. But I'm sure nowadays they're going to want to add all the.
I do think the property management companies do have a standard form that they're trying to utilize for each particular association. It's tailored for that association.
They do, and a lot of times it does work, but some lenders just won't accept it, even if it provides all the answers that they have from their questionnaire. They want it on their questionnaire, so it's kind of a mixed bag.
And I'm getting actually answers to some of the questions texted to me, but a well-known property manager who has many, many properties, he says that they still use their standard questionnaire and they try to push it, but most of the lenders are asking for this, but he's using it still. So I bet a lot of people are getting away with it with personal loans. So keep trying it.
Should trustees be provided a copy of the questionnaire and answers provided by the management company?
If you want them. I mean, you're the bosses.
It's not a bad idea to see what information is being provided.
Right.
I'm sure the management company would be happy to do it. Some managers probably just take care of it for you, but yeah. Plus, you may have something to add to it, so why not?
This is kind of goes to the older questions on the questionnaire. Often forms ask how many units are owner occupied. Though we try to get people to tell us when units transfer, we don't always know, nor do we know that it's reliable who our resident owners are. Is there any reliable strategy to force owners to give us this information?
So, Mark, what do you put on the questionnaire now for that question?
Usually put that they don't track the information because that's the truth. The condominium statute does require owners to report the names of occupants of the unit, so you could try to implement a rule and regulation, but I think that's probably you're probably best not to answer that question than try to guess at it if you don't really know.
And we've been evading that question probably for 20 years. This is in the old days. This is
Well,
what
do we
we're talking
evade it, or do we say that we don't track
don't
it,
know.
but we estimate it to
That's
be?
an evasion. A lawyer evasion. We tell them the truth. We
That's
don't
a-
really know.
Well,
That was a
I'm not
good
sure that's
redirect.
evading
Yeah.
it.
All right, wrong choice of words. But we don't. We've been dealing with that for many years, and they accepted it. In the beginning, there was a lot of pushback on that question. They were trying to force us to find out, and we said we just don't know. So eventually, these new questions will be dealt with the same way. We'll figure out an answer that they like.
Well, this is entirely self-serving, but I'm going to read it anyway because we're towards
Okay.
the end. Our HOA had MEEB fill out the management company questions for the lender. It was very helpful.
Thank you, Marianne.
Oh, Mary.
50-unit building with a management company involved. As a board member, should I communicate on condo business with owners directly or generally defer to management? I always tend to defer to management to avoid liability. Unless you're paying that person to communicate directly with owners. But Janet, do you want to address that one?
Well, I think it's best to defer to management because that they're the professionals. They're there to help you through this process. So I think I would advise deferring to management.
Look at the last question.
I have no idea where we are on questions. I could.
Oh, at the last. No,
We're at the last question. Which might have
I
been
love
more-
the last question. Because it comes up so much. It's the same question we've asked. We've talked about this already. The difference between a special assessment and a supplemental assessment. All of these are an amount of money that we just call something. So just call everything not a special assessment. A supplemental, don't use the word special or assessment. So don't call it a supplemental assessment because I've seen that and the bank doesn't pay it. They say, oh, that's an assessment. Just call it a supplemental fee or a condo fee 2 or a temporary condo fee, anything but special and or assessment.
So the answer is that there's really no actual difference other than the words.
It's semantics.
Yes.
We found this out many years ago. We just started calling it something else. The bank said, oh, that's fine. We'll pay that.
But you can back it up by having the line item in the budget. I think that helps. And basically you're saying you've revised the budget to include a temporary monthly fee.
I mean, you're doing a special assessment because you realize you don't have enough money in your budget. That's
Right.
all it really is. So you're increasing your condo fee. People just called it special assessments for a long time. And the banks, when the super lien law was passed in 93, carved that out. Said, we're not going to pay special assessments. So we just said, okay, we're not going to call anything a special assessment again. Because it's not like the special assessments to build a new pool. It's almost always because the budget doesn't have enough money in it to pay the snow plowing or something like that. So just don't use those words and you'll get it paid. And you won't alarm the lenders on these questionnaires because they won't see that word.
Okay.
Okay, that's the last question.
I think that's the last question.
Oh, no. There's more coming in. There's 3 more, Mark. You see them?
Not yet.
Do your docs need to allow you to assess the other than special assessment? Almost never. And if they do, if you need to do something in the other states, but in Massachusetts, you just, if it requires a vote of the owners for some reason, then just amend your budget and increase your condo fees. If you call something supplemental fee, how does that impact cost basis for the units? It shouldn't. It's just a different word for the same thing. I know it does become, people ask questions like they can't believe it. We just call it something else and it works, but that's how it works. Can it be applied to the cost basis for tax purposes at a sale?
It's an interesting question.
Because it's a capital
suppose,
improvement?
yeah, I suppose if the underlying purpose is for capital improvement, it can be.
This is usually more of a question that investors ask, and I always tell the investors they can deduct it anyway because it's part of the operating costs. But I would ask your accountants. We're not tax advisors.
All right, so why don't you go to the next, because I'm not sure where you read that question from. But one question is, can we make these slides available? And the answer is yes.
And they're going to be emailed out to everybody because I think she can just take the whole list of email addresses and do it. Okay. That is the last one. Oh, look, we're getting emails on this. Instead of, they're not chatting anymore, they're emailing us directly. So Janet, why don't you wrap it up?
Okay. Thank you, everyone. For those still participating, We hope that we've provided you some information so that you understand the state of the world post Surfside and how it impacts your association. Just be cautious when you're answering the lender questionnaires. Reach out to your property management company and make sure you're on the same page. And as always, MEEB and MEEB peeps are here to assist to the extent that you need it. Have a good night, everyone. And I guess, even though I'm not a sports person, go Celts. I
Exactly.
can't even tell you who they're playing, but I know they're on.
Ask your husband.
Thanks, everybody. Thanks.
Thank
Bye.
you.
Thanks.